Hello friends, welcome to Wise Investor. Today we are going to analyze fourth quarter earnings along with annual earnings for 2021 for the Facebook, or should I say Meta.
It is time for us to adopt a new company brand to encompass everything that we do. To reflect who we are and what we hope to build, I am proud to announce that starting today, our company is now Meta. Our mission remains the same. It's still about bringing people together. Our apps and their brands, they're not changing either. And we are still the company that designs technology around people.
If you want to experience Metaverse explained by Mark and his team, you can find the link in the description below. Let's begin by comparing fourth quarter earnings from the latest quarter report to the year before. In the last quarter, revenue grew by 20%, however operating income went down about 1%, along with an 8% decline in the earnings. On the other hand, free cash flow went up about 35%, which is a very good sign. This tells us they have made more money compared to the last year just from their operation, before spending that cash on the other activities like paying their debts, buying back shares, reinvesting in the company, or handing out a nice dividend. Their net cash flow went down about 66%, but it is a positive. We will need to further dig into cash flow statement to see how it derived, to see whether it was healthy net cash flow or not. Okay, so based on this we now know there were more investment expenses in operating activity that the Meta did compared to the last year, along with either loss in investment or more taxes or both, as net income went down more than operating income. Let's examine the earning report. The Meta now report earnings in two business segments: family of apps for existing apps including Facebook, Instagram, Messenger, WhatsApp and other services, and Reality Lab for all the Metaverse technology endeavors. As we can see, Reality Lab contribute about 2% of total annual revenue for 2021, and family of apps contribute about 98% of total revenue. Actually, the Reality Lab segment is dragging down the revenue with growing operating loss in the last 3 years. In fact, revenue is growing more than 100% year over year for the Reality Lab segment, compared to the average rate of 28% yearly growth for the family of apps in the past 3 years. But so does the operating expenses, which is almost 5 times of the revenue from this segment and causing almost 50% decline in annual operating income for the Reality Lab. For 2021, the Reality Lab segment spent around $12 billion just to get $10 billion in income loss. Now let's break down the earning for the last quarter. Total revenue did go up about 20%, however total operating expense also went about 38%, along with 32% raise in tax expenses and 58% decline in investment income. This all have contributed about 8% decline in net income and 5% decline in diluted earnings per share, regardless of revenue growth. In fact, revenue growth has been declining with growing operating expenses and tax expenses, which kept pressure on net income growth in the last few years. Based on the company guideline, revenue growth for the first quarter of 2022 would slim further down to 3% to 11% due to some headwinds, including change in consumer taste for the short videos with lower monetization option and growing competition from TikTok to Reels from the Meta, change in the iOS platform for the ad targeting, and lower ad spend because of the cost inflation and supply chain disruption. If that's not all, the Meta expect another hit from the exchange rate to turn the revenue down. On the expense side, the Meta plans to continue with its 2022 outlook for 90 to 95 billion compared to total 71 billion spent in 2021, which is more than 27% increase in the operating expenses. This means that we would definitely see another similar big decline in the net income during the first quarter of 2022. And if the Meta could not turn around the ship for their annual revenue growth for more than 27% in 2022 to keep up with their rising operating expenses, we would definitely see another decline which could turn away some long investor. One thing to point out for major investment in 2022 for operating expenses, Mark and his team did explain 7 key areas including Reels, community messaging, commerce, ad, privacy, AI, and the Metaverse. Specifically, the Mark point out to a transition towards short video platform called Reel for major ad revenue growth potential. Mark also point out about continuing fixing ad infrastructure that seemingly become less effective to provide personalized ad due to regulatory change and iOS platform change. Shirley also did mention big potential for live shopping in commerce as well. Now let's quickly examine the cash flow. Annual cash flow seems to give fair picture here. The Meta has generated about $39 billion of free cash flow and another $10 billion by liquidating some investment. The majority of that cash spent on to buy back their own shares worth of $44 billion along with taxes and debt payment. They also had some adverse impact from exchange rate that cost about $500 million in net cash. Ultimately, the net cash flow went down about $1 billion. Overall, the Meta seems to have made good use of their money for its investor based on the cash flow statement. As for profitability strength, all the profit margin looks good. It shows their competitive advantage with gross margin well above 60%, efficient operation with operating margin well above 15%, and well paid in net margin well above 20%. Along with 24% annual return on asset and 32% annual return on equity, shows the healthy return for the investor money in the company's asset. As for financial strength, quick ratio at 2.94 and current ratio at 3.15 shows about $3 cash in company's balance sheet to pay down $1 worth of short-term debt. And debt to equity at about 0.33 shows $32 debt compared to $100 worth of equity position in the company to support $133 worth of asset. In other words, total debt of the business can be paid down with only 32% of total equity in the company. Overall, they seems to have healthy balance sheet to finance their operation and investment in the business. As for return for investor, total share outstanding went down about 3% from a year before. And based on earnings report, the board has also authorized about $38.79 billion for more share buyback as well. So they are in process of making each share worth more. That's a huge plus for long-term investors. Finally, the moment you all have been waiting for, valuation. So how much Meta is worth? Soon after the earnings report was released, the market reacted by falling the stock price down from $325 to well below $250. If you compare the PS ratio of Google at 7 and market standard at 5.5, the price should be in the range from 226 to 288. If we compare the PE ratio of Google at 23 and market standard at 18, the price should be in the range from 247 to 316. Now, if we take the discounted cash flow with 10% discount in compared to 8% rate that we normally get if we invest in S&P index fund ETF, assuming the growth rate for the cash flow from 12% to high as 20% for next 10 years, we can expect the price should be in the range from $274 to $472. If we take discount rate of 12.5%, the price should be between $221 and $373. Again, the growth rate is extra conservative here, from 12% to 20%, given the free cash flow has grown at average rate of 94% over the past 10 years and 31% over the past 5 years, and the Meta holds new big potential for the metaverse technology. It could very well grow at least 30% for the next 10 years if everything turns out into Meta's favor. If we pick 30% growth for the next 10 years with 10% discount rate, the Meta could be worth as much as $900 as of now. So how analysts are rating the Meta? As of now, most analysts have kept their buy rating from low as $225 to high as $466, with an average rating at $332. And are there any investor? There seems to be more buy transaction in fourth quarter compared to third quarter of 2021. One that stands out is Li Lu from Himalaya Capital Management. He's a value investor and well-known friend of Charlie Munger. So how much the Meta is trading right now? As of today, it is trading well below $210. I feel it could very well go below $200 or more given the economic condition, market sentiment, and current outlook of the Meta. But it would very much likely high value stock for the long-term investor. So what's the take for the wise investor? We should not jump all in given some risk in the near term, but we should not wait long given the huge reward potential. If the Meta successfully convince investor for earning growth or 2022, price could go up for the stock. I would say start making some substantial incremental position in the Meta at this price with dollar cost averaging. To summarize, the Meta seems to have a hard time right now as its current ad revenue potential become a concerning due to platform change, regulatory change, inflation, supply chain disruption, and competition. However, the Meta is in process of investment in itself to fight against this situation for the long-term substantial revenue growth. Besides, the Meta is now a collection of reputable brands, including the Facebook, Messenger, Instagram, WhatsApp, and others. Also, the Meta is just getting traction on the metaverse technology with its new business segment, Reality Lab. If the Reality Lab become a real, there is a huge investment potential in the Meta. No one can argue the Meta is the future. As the Steve Jobs once envisioned the PC as the future and later envisioned the smartphone as the future, I feel like Mark Zuckerberg has already proven his first vision as a social networking platform with Facebook, and I believe one day his next vision for the metaverse in the Meta would become a virtually alive with a growing adaptation by people. So, what do you think about the Meta and its growing investment in the metaverse technology? Do you think the virtual reality is a way of life in the future for us to communicate with each other, to entertain, socialize, and work? I hope I presented all the aspects of Metaverse from its earnings report in fourth quarter 2021 to help you make wise investment.
It's a future that is beyond any one company that will be made by all of us. We've built things that have brought people together in new ways. We've learned a lot from struggling with social issues and living under closed platforms. And now it is time to take everything that we have learned and help build the next chapter. I am dedicating our energy to this more than any other company in the world. And if this is the future that you want to see, then I hope that you will join us, because the future is going to be beyond anything we can imagine.
In case if you decide to go with this opportunity to achieve a huge reward with present risk, I also try to find a balance so that you invest enough to get substantial return, but not as much so that you lose your nice good night's sleep. If you like our video, don't forget to hit the like button and share with your friends. Also, subscribe to our channel so that you don't miss our upcoming video about such an interesting analysis in the investment community. If you would like us to cover any specific investment opportunity, please share with us in the comment below. We would like to hear from you. Thanks for watching.